5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Tuesday. More talks. President Trump calls for a meeting between Presidents Putin and Zelensky and a trilateral with himself. The big Intel bet. The Trump administration weighs a 10% stake. SoftBank buys a surprise $2 billion worth of shares. And playing for time, stocks go nowhere fast around all-time highs ahead of retail earnings and Jackson Hole. We are still going nowhere this morning. As a matter of fact, yesterday the S&P ended the session down 0.01%. We are so close to all-time highs, but maybe why would you take on risk? More earnings, Jackson Hole. Do we get a Fed tonal shift? So both the S&P and NASDAQ, little change. Russell underperforms after an outperformance yesterday. Also yesterday, you had the entirety of the curve higher. We are little changed yet again this morning. Your 2-year yield, that is slightly lower, but the 10-year yield at 4.33, 30-year yield at 4.93. We also had another poor auction in Germany, so you really are starting to feel some of the tension on the long end of the curve. Let's look at some of the stocks moving in the pre-market, though. With that is Valerie. Hey, Val.
Good morning, and Danny. Let's start with Intel. Surprise move by SoftBank to invest $2 billion in equity stake in the company. We're seeing Intel shares rise over 6.5% in pre-market trade. This comes a day after the U.S. announced they wanted to convert that CHIP Act funding into a 10% equity stake. And Intel now has risen over 25% since the CEO met with Donald Trump last Monday. Let's move on to earnings. Palo Alto, this is the cybersecurity software firm. Some bullish forecasts when it comes to revenue for next year. We're seeing those shares jump 5.5% in pre-market trade. They say demand for their AI-enabled software security systems is looking strong. And lastly, let's end on drones. Geopolitics front and center here yet again. The FT reporting that the Ukraine and the U.S. might enter in a $50 billion deal to produce Ukraine drones. We're seeing the likes of A-Eagle Aero Systems up over 2%. Many of the drone stocks traded positively into the close after this report. Danny.
Valerie, thank you very much. And in some of the movements in Ukraine and Russia and peace talks, we're seeing oil come lower this morning by about 1%. Now, in this hour, it's conversations you don't want to miss. Sam Lynton-Brown of BNP Paribas will join us shortly to discuss the steepening yield curve, and we'll catch up with Keith Lerner of Truist later this hour on an equity market hovering around all-time highs. Now, bonds, as I mentioned, bonds sold off across the curve yesterday. And with that, the gap between shorter and longer dated U.S. borrowing costs has been widening. The 5/30s yield curve has now reached its steepest level since October of 2021. Joining us now is Sam Lynton-Brown, head of global macro strategy at BNP Paribas. Sam, wonderful to see you this morning. And look, it's a long end that's been under pressure. When you look at this, how much of it is about inflation concerns, deficit concerns, versus more technical factors like changes to Dutch pension schemes that have been pressuring the long end?
It's all of the above. I think in the US, it's predominantly a fiscal and inflation story. But in Europe, while it's also a fiscal story, to a lesser extent, it's an inflation story. And the reform you mentioned that I'd certainly like to talk about in the Netherlands is a key driver. Perhaps if we first address the US, though. So for the US, on the fiscal side, an interesting point here, I think, to flag is the monthly budget numbers that are coming out actually look a bit better than the market was expecting. So we had data, for example, for the end of July. It shows that the US deficit is running at a lower run rate than last year, 4% lower. If we think about what that means as well from an issuance perspective, we heard from the Treasury, from Treasury Secretary Scott Bessent, they're planning to fund any incremental financing requirements they have through bills, not through bonds. So our view, a little bit contrary to consensus here, is that long-end bonds in the US could actually outperform versus swaps.
Long-end bonds could outperform. Sam, that's something considering so many people have been terrified about touching the long end of this curve. What is your timeline for that, especially if there are concerns that we get a shift to a more dovish Fed that pressures further the long end, if there are inflationary concerns alongside that?
It's a crucial risk that if the market begins to price less inflation credibility from the Fed, that we'll see that permeate across the curve. To some extent, that's been playing out. But when we look at inflation break-evens in the US, while the front end has repriced higher, that's predominantly a reflection of the market's expectation that tariffs will drive prices up. if one looks at, for example, 30-year break-evens in the US, they're at a level that effectively prices the Fed hitting its inflation target on average over the next 30 years. So it is a key risk. I think it's an important risk that if the market gets more concerned on the Fed, if there is perceptions around political interference getting embedded into inflation expectation markets, that the long end in the US will certainly be under pressure.
Sam, can we just sit on the Dutch pension reform for a moment? Because I know you've been doing a lot of work on that, not even insofar as that it's affecting European markets, but we've seen other foreign tails wag the American dog, be it concerns of fiscal in Japan impacting the U.S. How much of what's happening in Europe right now in the Netherlands, how much of that is slightly filtering in to American bonds too?
I don't think it's having a big impact. I think the US is the story that's predominantly driving the rest of the world rather than the other way around. And perhaps to a lesser extent, Japan, as you mentioned, which is an important market today. We had again some weakness in the long end of the curve following a weak 20-year bond auction. That's also contributing. For Europe, the story here is that the curve is quite flat compared to other markets. So at the start of this year, the long end of the Euro swaps curve, for example, 30-year compared to 10-year was actually inverted. That's very different, for example, to Japan, to the UK, or even to the US. That inversion has now sort of abated. The market trades between 20 and 25 bips positive in 10s, 30s. But the key point we think from here is that we're going to see a significant further steepening in the Euro swaps curve.
Meanwhile, Sam, we are at the week of Jackson Hole. In Jackson Hole's past, it's been big policy pronouncements, be it 2022, the Payne speech, or last year, the time has come to adjust. For Powell this time around, do you see any reason for him to either endorse or push back against current market pricing of cuts?
It's very tricky for the Fed at the moment, and in particular for Powell. The way I'd frame it is that the Fed at the moment, our view is it's bimodal. We're either in a scenario where the employment data rebounds somewhat, hiring in the payroll print that we get on the 5th of September is solid, the unemployment rate doesn't rise. If we're in that state of the world, especially given the PPI data that we had last week, we think this is a Fed that's going to be cautious to cut rates. And that's the central case that we have here at BNP Paribas. That's been our view since November 2014. No Fed rate cuts in 2025. The other scenario, though, and it's a scenario where we're very attuned to the risks, where we acknowledge that it's plausible, is the employment data is weak, the labor market's deteriorating faster than we anticipate. If that's the case, the Fed's going to cut. And it's going to cut very quickly, and it can cut by a lot. Potentially, it could cut 150 basis points, 3 consecutive 50-bip cuts this year. And that's because if the labor market's weakening, the Fed is much less concerned about the increase in prices that's going to come from tariffs, because that increase is going to be one-off. It's not going to be sustained. So if the labor market is weak, that's what the Fed will react to. They'll cut a lot. Our central case is the labor market will hold up okay, and therefore the Fed's not going to be cutting.
We might not know the answer to that, Sam, for some time, though, and we certainly won't know the answer to that this week during Jackson Hole. But if you look at just the FOMC, of course, you have Bowman and Waller, who've been leaning more dovish, but it's not just them. It's Cook, Musalim, and Daly have all shifted a lot of their speech to skew more dovish, too. If we have a Powell who is a consensus-building Fed chair, which we know he has been, does he have any choice but to also lean more dovish in what he talks about this week?
It's certainly possible. On the basis of the reaction function that Powell laid out at the last FOMC meeting, from what they've seen so far, they shouldn't be cutting rates. He premised the reaction function on the unemployment rate and core inflation. The unemployment rate's gone up, but it's still below a level the Fed see as the non-accelerating rate of wages for unemployment, the sort of the neutral level. And it's still well below where the Fed project it to be at the end of this year, which is 4.5%. So on the basis of the Fed's reaction function, they should not be cutting rates, even given the data we've had over the past 3 weeks. The question is, and I think it's the right question, is if you have a lack of consensus on the Fed, given all of the pressure, is the easiest move at this juncture to do what's sort of somewhat risk mitigating, delivers on that consensus, and therefore delivers a 25-bip cut in September. I think that if Powell is to do that, we probably should see some type of remessaging of the Fed's reaction function when he speaks at 3 p.m. London time this Friday.
Well, we'll also get Fed minutes tomorrow, so that also might be instructive for the split happening at the FOMC. Sam, so wonderful to start our morning with you. Thank you for joining us. Sam Lynton-Brown of BNP Paribas. We're also going to be hearing from Fed Governor Michelle Bowman. That is a conversation you do not want to miss. It'll take place at 10 a.m. in New York, 3 p.m. if you are in London. Now let's get you some other top stories that are trending on the terminal this morning. Sources say that the Trump administration is in discussions to take a stake of about 10% in Intel. The government is considering a potential investment that would involve converting some or all of the company's chips from the U.S. CHIPS Act into equity. Grants, rather, I should say, into the CHIPS Act. A White House spokesman declined to comment on the specifics of the discussion. And more on Intel. SoftBank agreed to buy $2 billion worth of its stock. The Japanese company has been trying to become a central player in AI, but has largely been a bystander. SoftBank's move delivers a strong vote of confidence in Intel as it struggles to remain relevant in the AI space. Elsewhere in tech, Apple is expanding iPhone production in India at 5 factories, trying to lessen its dependence on China for U.S.-bound models. Sources say the company is producing all 4 iPhone 17 models in India ahead of their debut next month. It's the first time that all new variants will be shipped from the country. Coming up, President Trump pushes for a Zelensky-Putin summit. We're going to have more on that and security guarantees for Ukraine. That's coming up next on your brief.
We need to stop this war, to stop Russia, and we need support, American and European partners. We will do our best for this.
If everything works out well today, we'll have a trilat, and I think there will be a reasonable chance of ending the war when we do that.
The coalition of willing countries, that's 30 countries already working together on security guarantees, will now work with the US on those guarantees.
My hope is that the United States do the most possible, because that's what will allow us to alleviate the burden on Europe, and that the United States also confirm its commitments, because that was a big question mark.
Presidents Trump, Zelensky, Macron, and Prime Minister Starmer speaking after yesterday's summit in Washington, D.C. Bloomberg reporting earlier this morning that Europe and the U.S. are now working on how to guarantee security for Ukraine. For more, let's bring in Bloomberg's chief European correspondent, Oliver Crook. Oliver, what appears to be the outcome of yesterday's meeting?
Yeah, Danny, when we sort of step back and think about kind of what the Europeans left with, how they can feel about the meeting that they held in the White House yesterday, I think that reasonably they can say that they had a reasonably good meeting with Donald Trump. It went fairly well, particularly compared to the last time, obviously, that Zelensky was in the Oval Office, which was, a catastrophe by basically any sort of measure. I think what they wanted to make progress were on a couple of topics. The question of ceasefire, that is the one where it was probably the weakest. Trump has really distanced himself from an idea of a ceasefire, something that Trump originally posited and really was pushing very hard. That is an idea that he has basically since abandoned since his meeting with Putin. On the question of Article 5 and security guarantees, to me, this is the most significant outcome over the last couple of days, something that basically was being touted by many of the Trump advisors, including Ambassador Witkoff, and it's something that Trump himself sort of confirmed yesterday. Again, it is still very unclear what this means. Does this mean that the United States would effectively come to the aid of Ukraine militarily if ever its sovereignty were imposed on again after a peace agreement with Russia? That is basically de facto NATO membership. It's hard to imagine for the Russians signing on to that in any kind of negotiation. What I think is interesting, though, is for the Europeans, they leave this sort of capital of Washington, D.C. with this kind of victory. They've presented an extremely unified front to Donald Trump. Danny, what that papers over are some very difficult discussions that need to happen back home now for these European leaders. They need to, A, figure out how they are going to pay for all of this architecture, because we know that Donald Trump in the United States has no interest in financing it. And the second question is, are they willing, as sovereign nations, to put their own military personnel in Ukraine, theoretically, as peacekeeping operations that could, at some point, potentially have to return fire on Russian troops? These are some of the very difficult discussions that they need to have. They put that unified front to Donald Trump because Donald Trump does not want to complicate matters with the Europeans, but they need to sell this to their domestic audience, and that's what they're on their way back to do now as they develop what this architecture will actually look like.
So you have Europe presenting a united front. But Oliver, where do the gaps still remain? You mentioned some of it with the security guarantees, but between Ukraine and Russia, if we are to get something like a bilateral or a trilateral, how much closer does it seem like we might be nearing something that looks like peace or an agreement?
Yeah, so I think it's very hard to tell, Danny. I think that one of the other takeaways from this meeting yesterday, and I think that the Europeans and the Ukrainians can be pleased about, is that there did not seem to be a lot of pressure from Donald Trump, at least publicly, on the subject of giving up territory. He kept repeating and said several times that that is a Ukrainian decision at the end of the day. So that is something that will come as a relief to many of the watchers, including the Ukrainians. There is a lot of question about whether any progress can be made without a ceasefire. We had Emmanuel Macron and Friedrich Merz both pushing this idea that basically you can't have any negotiations, make any progress without a ceasefire taking place. And that, for the moment, is really off the tables. In terms of what we're looking ahead to, Danny, this is what we got from Donald Trump on Truth Social after the conclusion of the meeting. He says that after the meeting, I called President Putin and began arrangements for a meeting at a location to be determined between President Putin and President Zelensky. After that meeting takes place, we will have a trilat, which would be the two presidents plus myself. So again, the details are still pretty sketchy on this. I think the hope from the White House is to get the bilat meeting in the next 2 weeks and then potentially a trilat in the 2 weeks after that. But again, Danny, much of this still seems to still up in the air as they sort of hone in on what the potential dates could be for this.
Oliver, this conversation isn't ending anytime soon. Thank you so much for joining us this morning. Bloomberg's Oliver Crook. And should just point out, as we've had those discussions and that push for peace, we are looking at weaker oil prices today, both Brent and WTI down about 1%. Now, over in India, Prime Minister Narendra Modi has moved to ingratiate himself with President Putin, calling him, quote, my friend in his post on X. Those moves have come after the U.S. has put pressure on India to stop buying Russian oil. For more, we are joined by Bloomberg's Indian government reporter, Sudhi Ranjasen in New Delhi. Sudhi, great to see you this morning. And not only is it this post from Modi, we also have China's foreign minister Wang Yi going to India. How significant might that meeting be between the two?
Well, it's a very, very significant meeting. And you know, there have been a couple of meetings in the last couple of hours, starting yesterday, when China's Foreign Minister Wang Yi met India's Foreign Minister Subramaniam Jaishankar. A short while ago, he met India's National Security Advisor Ajit Doval. And the last meeting with the Prime Minister is to happen in a couple of hours from now. Very significant meetings from at least, you know, what we are getting to hear. Both sides are kind of saying they want to get the relationship at a level where both countries can work together, both expressing a deep interest in better relationship. Now, that is a big movement. India and China, for a brief, to give a brief background, India and China did have a very, very, you know, tense relationship for the last 5 years following a border standoff which left soldiers dead. Now things to be turning the other way around, and it happens at a time when India-US relationship is tense and under strain, and India has been criticized by the United States for buying Russian oil. So it is very important. And going forward, Prime Minister Modi will be in China, his first visit in 7 years, and he will be meeting his Chinese counterpart, President Xi Jinping, there.
You mentioned the tensions with the U.S., Sudhi. To what degree is this just an outright rejection? Is this Modi and India saying, America, we don't need you, and we're looking elsewhere?
No, I wouldn't put it like that, because there are too many things at stake between India and the United States. Relationship may have soured, may be a little difficult right now, but doesn't look like, at least from the reporting that we have done, from the briefings that we have got here in New Delhi and my colleagues back in Washington, doesn't seem that both sides are willing to write off the relationship. Rather, both sides are looking at, you know, this is a difficult patch, how to get over it. However, having said that, India is looking out for alternatives. India is looking at how to boost its economy. And that is where China and Russia come in.
All right, Sudhi, thank you very much for joining us this morning on that. That is Sudhi Ranjasen on the latest with India and China. Now, coming up, speaking of China, NVIDIA prepares a new chip specifically for the country. We're going to have more of that in your front page news. That's coming up next. Stay with us. Welcome back to your brief. I'm Danny Berger in New York. Let's take a look at the front pages, what's making headlines on the major publications. First up, the Wall Street Journal and most newspapers leading with this, the meeting between President Zelensky and President Trump. Trump is pushing Zelensky to meet with Putin first before a potential trilateral summit. Next up, Reuters reporting that NVIDIA is developing an AI chip specifically for China. It would be called the B30A and be more powerful than the H20 model. It aims to deliver samples to China clients for testing as early as next month. And on the New York Times, sources say that Hamas has accepted a new ceasefire proposal for Gaza put forward by Qatar and Egypt. The plan would see the release of Israeli hostages and Palestinian prisoners. It was unclear, though, whether Israeli Prime Minister Benjamin Netanyahu would accept the proposal. Just want to bring you some breaking lines. Air Canada flight attendants had been on a strike. Air Canada flight attendants saying that that strike has ended. They had been seeking higher pay and compensation for periods when the plane isn't in motion. But again, the flight attendants there saying that the strike has ended. If we have any more details, we'll bring that to you. You're watching Bloomberg Brief. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Tuesday. More talks. President Trump calls for meetings between Presidents Putin and Zelensky and an eventual trilateral to include himself. The big Intel bet. The Trump administration weighs a 10% stake. SoftBank buys a surprise $2 billion worth of shares. And playing for time, stocks go nowhere fast, around all-time highs, ahead of retail earnings and Jackson Hole. Yesterday, it was a second consecutive day where the S&P narrowly loses ground, and emphasis on narrowly because what you're seeing this morning is basically what you had yesterday. Little change for the S&P and NASDAQ. Russell 2000 underperforms after outperformance for the small caps yesterday. For this bond market, it was yields higher across the curve yesterday. Taking a break from that this morning, but again, little change, maybe lingering concerns of inflation, but also between Jackson Hole, the weak bond auction in Japan this morning. Why would you really take any risks at this moment? Should also flag that oil is down by about 1% on talks between Ukraine, the U.S., and the rest of Europe over Russia. Let's get some stocks that are moving in the pre-market, though. With that is Valerie Teitel. Hey, Val.
Good morning, Danny. Let's start with Intel. The stock up over 6% in pre-market trade. This comes after a surprise announcement by SoftBank. They'll be investing $2 billion on Intel's revival. And also a day after we heard news that the U.S. the government wants to convert that CHIP Act funding into a 10% equity stake in Intel. The stock has now risen 25% if you take this move into account since the CEO sat down with Trump last Monday at the White House. Moving on to earnings, Palo Alto, this is the security software firm, up 5.6% in pre-market trade. Danny, they raised their revenue guidance for 2026 off the back of strong demand for its AI-enabled security products. And lastly, ending a bit on geopolitics, the FT reporting that Ukraine and U.S. are looking at a $50 billion deal to invest in drone technology. Ukraine produced drones, but it's still boosting the likes of drone stocks here in the U.S. We've got A-Eagle, Aero Systems up over 2% in the pre-market, and many other of the drone stocks are in the green this morning. Danny.
Valerie, excellent work this morning. Thank you for that roundup, Valerie Teitel there. Elsewhere, stocks are hovering just below record highs. Keith Lerner of Truist weighs in, writing, quote, "The bull market uptrend continues to deserve the benefit of the doubt, even while we still expect a choppier near-term environment and digestion period." I'm pleased to say that Keith joins us now. He's Co-CIO and Chief Market Strategist at Truist. Keith, thanks for joining us. Okay, stocks near all-time highs, credit spreads around the tightest since 1998. What gives you the confidence that we can continue to push higher?
Yeah, well, great to be with you, Danny. I mean, what you just talked about, like credit spreads being really tight, markets around all-time highs, that tells you that expectations are higher. So that's maybe the risk. But our ultimate theme, I mean, as we think about a little bit longer term than just the next week, when we think about the next several months, I mean, the key driver of this bull market has been earnings. And if you look at markets at all-time highs, earnings or forward earning estimates for the S&P are at all-time highs. Now, a lot of that is driven by tech, like what I call the big T, technology over tariffs. technology, communication services. But I will say more recently, what we've seen that is that broadening out to small caps, the equal weight index as well. So I think the key, especially where valuations are today, will remain earnings.
When you say it broadens out to the small caps, Keith, is that because of what? The economic environment cuts? Or are you talking about AI improvements and productivity moving out to other companies beyond the big T tech?
Yeah, well, I guess more directly, we're just seeing the forward earning estimates for small caps start to move higher. And then when we look under the hood and say what's driving that, that is partly actually small cap tech, but there's also leverage with financials and industrial. So I think also, getting through this one big, beautiful bill, there's some offsets in there that actually help some of the small cap companies as well as far as lower tax rates, capital spending incentives as well. So I think that's why we're seeing it. The stronger trends are still with the large caps in tech and communications. That's where we're still overweight. But it is notable for the first time in about a year that we're actually seeing some better trends beyond just the growth sectors.
A lot of people, and Keith, this has been talked about to death, so forgive me for doing this, but I always think it's important to come back to, is the concentration of this market, the top 10 contributing to about 60% of the gains since the market low, just how tech-heavy this index has become. And over again, examples are brought back to the dot-com bubble. Keith, why is this time different?
I don't know that it's different per se, but here's a stat that's important. I think will be helpful. When you look at the technology sector on a year-over-year basis, it's up about 28%. When we look back over the last 2 decades or coming out of that technology bubble, the real issue or red alert is when it's up 100% year over year. So we're not even there. The other side is the tech side has the strongest earning trends of any sector. Even look at this last earnings season. We talked about how over 80% of companies are beating earnings for the S&P. Over 90% of technology companies are beating. Now, listen, there's a lot of discussion about how these companies are moving from cap light to a little bit cap heavier with all the capital spending. So that's something to watch. But right now, the earning trends are moving at a faster pace than the overall market. As long as that continues, we're going to stick with that sector overweight. If that changes, then we'll change our tune. And the valuations, even though high, are a lot different than when it was back in the technology bubble period.
But Keith, when you see things like Bitcoin and other cryptos at all-time highs, or even we learned yesterday that Chamath Palihapitiya is coming back with another SPAC into this market, is it fair to say that there is froth in some corners of this market?
Certainly. I mean, there's certainly pockets. And listen, I don't know that sentiment's at extreme, but there are pockets, as you mentioned, where you see speculation and you're even seeing, crypto come off a little bit on the margin. So again, if you say, hey, what's the biggest risk on a short term, is that after we moved up, people are feeling pretty good. And that bar for positive surprises is pretty high as we go into this Jackson Hole meeting. But as I step back and I think about the next 6 to 12 months, what's going to be the key factor? I think it will be, does the economy move forward? Do earnings start continue to make new highs, especially given where valuations are? So yeah, a little bit of froth, but not enough, not nearly the extreme that we saw, for example, back during the technology bubble or even back in 2021.
In terms of drivers, Keith, you've mentioned the one big beautiful bill, you've mentioned tech, you've mentioned earnings. Nowhere in there has been tariffs. If we had had this conversation in early April, we would have said that would have been the main factor driving all markets. Does it come back at any point as a driver, or do we have the certainty corporates are able to move through it and adapt, and we can forget about tariffs?
I don't think we'll move completely through it, but I think what happens, this market becomes very myopic at different times. And at one point, we were thinking tariffs were the only thing that mattered, or this week's Jackson Hole meeting is the only thing that matters. And it still matters, but it's not the only thing that matters. The other thing that, going back to your point, companies are adapted. And what we're also seeing is relative to those effective rates, there's a lot of carve-outs. So the actual amount of tariffs coming through is somewhat less relative to those extreme rates. And I think, as you mentioned, we've had corporations adjust during an inflation shock, the fastest interest rate hikes, since the 80s, supply chain disruptions, and each time our companies have been able to adapt. So I think they deserve the benefit of the doubt. Are we going to get some broken glass in the China shop? Probably, but again, I think at this point, the market still at least deserves that benefit of the doubt.
Keith, how are you thinking about American involvement in corporate America? We had overnight Bloomberg reporting that the Trump administration was looking at taking a 10% stake in Intel, SoftBank also seemingly buying some Intel stock as part of this push. There are more links, whether it be Trump posting on Truth Social about various CEOs or the U.S. government buying stakes. How do you think about these things?
Yeah, it's something relatively new. So I mean, at the end of the day, when there's all this news, what we tend to try to do is look back at things like relative earnings momentum, relative valuations, and going back to your question on tariffs. I mean, this is kind of a similar picking winners and losers. The government's kind of stepping in more. So I don't know that there's a big shift in our overall strategy, but historically, the capital markets has done a pretty good job of picking those winners and losers. So if there's going to be government support and more in these strategic areas, it's just something, we have to become more accustomed to. But we're going to still focus on those fundamental trends to figure out when to overweight or underweight. But maybe there's some less downside in some of these areas. But then the question becomes, are these companies focused on where they want to focus or where the government wants to focus, and where's the profitability? So it all roads lead back to profitability in our mind as we make investment decisions.
Hey, Keith, it is always a joy to catch up with you. Thank you for joining so early this morning. We always appreciate it. Keith Lerner of Truist. By the way, in terms of conversations you don't want to miss today, Fed Governor Michelle Bowman will be joining the team at 10 a.m. Eastern. Stay with Bloomberg for that conversation. First, though, let's get you some other top trending stories on the terminal this morning. President Donald Trump has widened steel and aluminum tariffs to include more than 400 consumer items. The new list was posted on Friday and includes items like motorcycles, baby booster seats, tableware, and personal care products that come in metal containers or packaging. Indian Prime Minister Modi has hailed Russian President Putin as a friend while his government moved to bolster relations with China. It's another sign that the country is tilting away from the U.S. in the face of President Trump's tariff threats. The comments come ahead of a meeting between Modi and Chinese Foreign Minister Wang Yi. And Chinese toy maker Pop Mart posted a revenue increase of 204% year on year in the first half of 2025. It saw revenue close to $2 billion. Net income jumped nearly 400%, boosted by global demand for, you guessed it, its hugely popular Labubu dolls. The Beijing-based company is racing ahead with its global expansion plans. Coming up, Europe and the U.S. get right to work on Ukraine's security. We're going to have an update on that coming up next on your brief. This is Bloomberg.
We need to stop this war to stop Russia, and we need support American and European partners. And we will do our best for this.
If everything works out well today, we'll have a trilat, and I think there will be a reasonable chance of ending the war when we do that.
The coalition of willing countries, that's 30 countries already working together on security guarantees, will now work with the US on those guarantees.
My hope is that the United States do the most possible, because that's what will allow us to alleviate the burden on Europe, and that the United States also confirm its commitments, because that was a big question mark.
Leaders from the White House and Europe speaking after the D.C. summit on Ukraine yesterday. Following that meeting, Europe and the U.S. are said to be working immediately on how to guarantee security for Ukraine. Joining us now is Bloomberg's Brussels bureau chief, Suzanne Lynch. Suzanne, to what degree does this seem to be marking the start of more serious talks and a prospect for peace?
Yeah, I think we are already now in the next phase of this. European leaders were relatively happy with how Monday's meeting went at the White House. But now the real work begins in terms of how to flesh this out. How would security guarantees work for Ukraine? So as we've been reporting this morning, that work is already starting between officials from the US and Europe, probably most likely military and intelligence officials, to see how this would work. And one of the most crucial aspects of this, and the key question, is whether European or allied NATO troops would be stationed in Ukraine in some way to try and help Ukraine bolster its security. There appears to be mixed views about this. Some countries are more keen on this than others. And of course, we have the big question of whether the United States would commit any military support to this.
So where do some of the gaps still exist in Europe specifically, Suzanne? They came to Trump with a united front. What happens as they go home and talk to their constituents?
Well, today, in just about an hour or so, all EU leaders, that's the prime ministers from all the 27 EU countries, are going to hold a virtual meeting, and they're going to be briefed by the 5 or 6 European leaders that were at that meeting yesterday with Donald Trump. They're going to get a debrief of that meeting, and this is going to, I suppose, be the first time that the EU gets together and sees, right, takes the temperature now, what's next for Europe? I mean, they were extremely worried that Europe and Zelensky was excluded from this process in the last few weeks. Yesterday was definitely a win that the Europeans are back at the table. But now, of course, it's coming back to the key question, which is whether the United States is prepared to give a security guarantee of some kind. Now, Donald Trump has appeared to shift on this. He has suggested that they would, but what form that would take is another matter. We've also got some countries like Britain, France, who seem to be more positive about the possibility of sending military personnel to Ukraine to help the country. Less sure if other countries are on board with that.
All right, Suzanne, thank you very much for that update. Bloomberg's Suzanne Lynch. Let's now turn to tech, where Intel getting a boost in the pre-market after falling yesterday. The Trump administration is said to be discussing a stake of about 10% in the chip maker. Adding to that, SoftBank has also agreed to buy $2 billion of the firm's stock. Joining us for more is Bloomberg's Tom McKenzie. Tom, what do you make of it all?
Well, it's opportune, isn't it, in terms of the timing, with SoftBank coming through with this commitment for a $2 billion investment, of course, in Intel. It's a vote of confidence to some extent from Masayoshi Son to Lip-Bu Tan, the leader of Intel, after he faced that pressure from President Trump. On the SoftBank story, look, this is about Masa building out his stable of the kind of companies that underpin the AI revolution. He owns, of course, a majority stake in ARM. He has a stake in TSMC, he has a stake in NVIDIA. And now he's building, or looks to be building, a stake in Intel as well. There's possibly some politics at play as well. It's certainly going to look good in terms of Washington, this commitment, this investment from SoftBank, from Masayoshi Son, in a company like Intel. And it comes, as we discussed, and aligns with that potential 10% equity stake in Intel by the government, by President Trump and the team and the US government. That would be converted in terms of subsidies that be committed under the CHIPS Act. Intel has received about $2.2 billion of those. It could be in line for up to close to $11 billion US dollars. And the idea would be, according to our reporting, that the government would be looking to convert some of those subsidies into equity. And it ties into this almost industrial policy now that you're seeing from the Trump administration in terms of taking stakes in key areas that they see, key sectors they see as national security challenges, whether that's rare earths or steel, or now Intel and chip making on domestic soil in the US.
Speaking of security issues, Tom, NVIDIA making a lot of headlines earlier in this month about the Trump administration letting them sell to China if they got 15% of the revenue. Reuters has this story this morning that NVIDIA is preparing for a new, more powerful chip to sell to China. What is the likelihood that they get regulatory approval for this, and why would NVIDIA take this tactic?
Well, the sands have shifted, haven't they? Because the Trump administration is now willing to go easy on some of these export controls in return for 15% of those revenues, of sales of those chips into the Chinese market. So it seems to be aligning with that change in thinking. And some would suggest, maybe a downgrading in terms of the national security focus from the Trump administration. Certainly that is a critique of this approach. The Trump administration and the Treasury Secretary Scott Bessent has pushed back on that idea and said, look, national security remains a key focus for us, but we can also extract these revenues. So it seems that NVIDIA is again tailoring its team to produce a chip that would fit into the Chinese market. There is going to be that demand still for those AI accelerators, given the gap remains versus its Chinese competitors, Huawei, but clearly a chip that will manage to get around those export controls that, again, have been softened now by a Trump administration in return for that slice of revenues.
Tom, thank you very much for that update. Tom McKenzie there in London. Now, we're also keeping an eye on Home Depot. They are set to be reporting earnings before the market open. Let's bring in Bloomberg's retail reporter, Jennifer Creary, for more. So, Jennifer, Home Depot kicks off the big box earnings. What's expected?
Yeah, so a bit of optimism from investors ahead of the results earlier this morning. the analysts are expecting a fairly positive read for results in Q2. And now the figure we want to look at is comparable sales. So the Bloomberg consensus for that is 1.4%, which is certainly an improvement from the previous quarter where we saw a slight dip. And that's thanks largely in part to spend on smaller DIY projects. So think your one-off ad hoc purchases, a new cabinet door, a new lick of paint. That's really buoying Home Depot's sales. Now, something analysts and investors will also be looking at is any comments that management will give on the impact of those ever-changing tariffs and whether or not Home Depot has been able to negotiate lower prices with some of its sourcing partners. We know that Home Depot sources just under 50% of its products from outside of the US. So investors will be looking at for any signs that Home Depot has been able to manage some of those costs, because we know that there's only so much retailers can do to swallow up those costs before they start passing them on to consumers.
I was about to say, to what degree are we going to learn more about the consumer? We don't just get Home Depot. Following that, we'll also have Target and Walmart earnings this week, Jennifer.
Yeah, exactly. I mean, what's really impacting Home Depot at the moment, of course, we have spend on smaller DIY projects, but there's still some persistent weakness in those big ticket discretionary spends. So those more costly home renovations, think your bathroom, your kitchen renovations that consumers are putting off until we see lower interest rates. Potentially, we might see a cut in interest rates in September, so that's giving them a bit of optimism. Some analysts have noted that potentially, consumers they'll eventually have to get round to some of these big ticket spends. So that's giving consumers a bit of hope going forward.
Jennifer, thank you very much for that preview. Jennifer Creary, and again, we will be getting Home Depot earnings today. Coming up, an interview with the Fed's Mickey Bowman. We'll also have some more housing data. We have your trading diary for you next. This is Bloomberg. You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trading day on this Tuesday. Home Depot will be reporting earnings before the bell. Those should actually drop in any minute now. We're also going to get U.S. housing starts and building permits data. That's at 8:30 a.m. Eastern. 10 a.m. we're going to hear from Fed Governor Michelle Bowman right here on Bloomberg. An important conversation not to miss. Now, some of the stocks moving in the pre-market, Intel being among them. Those shares up just under 6.5%. SoftBank is investing about $2 billion worth of shares. The U.S. also looking to take a 10% stake in Intel. Palo Alto, those shares up more than 5.5%. They had stronger than an expected annual forecast in their earnings after the bell yesterday. And just dropping moments ago, you can see at the bottom of your screen a headline from the Wall Street Journal on Medtronic. The medical producer developer is adding directors to its board. Elliott Management has become a major holder. Now, in terms of this overall market, everything is very quiet. Bonds are barely moving. Stocks are barely moving. Here's the one thing that's kind of moving. It is oil. It is now down, I should say, less than 1%, about 1% for both Brent and NYMEX crude. We had that meeting in Washington, D.C. between Zelensky and the coalition of the willing of Europe, getting maybe closer to something of conversations. Trump putting on Truth Social about talks of a bilateral and then a trilateral, including himself, Putin, and Zelensky. So that seems to be moving oil this morning. All right, that is it for Bloomberg Brief. Surveillance takes things from here. You're watching Bloomberg TV.